Welcome to Second Take, the show that focuses on the issues behind the news. Discussions about the future of energy in South Africa have again come to the fore in the past few weeks. Terence Creamer joins me to discuss some of the hot topics, from fracking and refining to private power production. Terence, welcome to the show. The debate about fracking in the Karoo has again heated up. This is now following the release of an economic study on the subject. Can you take us through some of the main themes of the study?
Well, the econometrics was commissioned by Shell to do a study into the macroeconomic impacts. You know, the debate is really centered on the environmental impacts of fracking, and there's a lot of concern about that still. We're in a phase of a moratorium on any exploration licenses for hydraulic fracturing in the Karoo. But what econometrics tried to do was to look at the numbers, and they looked at this resource base, which is estimated at 485 trillion cubic feet, which is a very, very large resource base. And they just looked at two scenarios of extracting, say, a small portion of that 20 trillion cubic feet or 50 trillion cubic feet over a 25-year period. And they found that the numbers were quite favorable for growth, for gross domestic product, as well as job creation. Their numbers were suggestive of gross domestic product of between 80 and 200 billion rand a year, and job creation of up to 700,000 upstream and downstream jobs. So big numbers. And but I think they admit as well, they're not environmental experts, but they were looking at the economics of fracking in the Karoo. And all they're saying is that the numbers suggest that it's a little bit too big to ignore, so that you need to take this as a serious resource base, particularly in the context of a electricity or energy constrained environment in South Africa. We're both an importer of fuel, which is it's a constraint on our balance of payments, as well as the fact that we wanting to diversify our energy mix away from coal. So we've got the renewable energy program. It looks like we're going to have a nuclear program. They're saying natural gas, even if it is unconventional, needs to be looked at as a potential contributor to that energy equation. So basically the theme is saying this thing's too big to ignore, but we need to find out if it's there. And that's the problem at the moment. We've got a moratorium around exploration, and it's very hard to firm up this resource estimate, which is really an estimate that comes out of the US, which has done a global review of the fracking of the shale gas resources around the world, whether it be in China or in South America or in places like South Africa. And this 485 trillion cubic feet number keeps coming up, but it's not a firm number, it's a speculative number. And basically what the argument of the econometric study is that we need to firm the number up. And the only way we can firm that up is by lifting the ban on exploration and looking at that resource base. Obviously, there's a lot of opponents to it still. The fact that it's funded by Shell and bankrolled by Shell, really immediately raises the hackles of many opposition groups. The Treasury of the Karoo Action Group has raised a number of concerns about the study and whether it can be taken seriously. So has the WF raised a number of concerns, saying that the figures are speculative. Jonathan Deal says that it looks to cherry pick from other studies around the world rather than looking at the reality of South Africa, and it maybe discounts some of the downsides of fracking, not just environmental, but some of the economic downsides that have come out in some of the studies around the world. So there's a lot of skepticism about the study, but I think it puts some things on the table. It raises the issue of the size and the potential economic benefits. In fact, showing that it will be bigger than our coal mining industry in terms of contribution, should we just go for a small portion of what is suspected to be there. So fairly significant in terms of size, fairly significant potential contributor to the energy diversification of our mix. So basically saying we need to take this seriously. It's now in government's court. There's this moratorium. It's been here for more than a year, and there is a task team looking at it. There was some legal action around that task team and the nature and the makeup and who was part of that task team that's advising government. That's gone to court, and the ministers had to make some responses to that, and basically looking for transparency about who is on this task team. And once that task team report is out, that it's probably going to go to Cabinet, and Cabinet will have to make a call. Now, some countries have decided to hold the moratoriums, and not to allow for the continuation of fracking. South Africa is going to have to make its own call in this regard, and I suppose this study is just trying to add some sort of information into the mix.
Discussions about the security of liquid fuel supplies as well as the future of fuel prices have also been prominent. Can you tell us more?
Yeah, we've seen the oil price really going up quite strongly, even though other commodities have come down in the last few weeks with the concerns about the future of Chinese growth. Fuel, Brent crude prices have stayed above the $120 a barrel level. And we've seen our own petrol prices at the pumps going up this week quite dramatically. And then, of course, with the fiscal changes that came in with the budget, next month we're going to have another 28 type cents a litre going. So our prices are on the rise, and this is even in a context of a fairly strong rand, of a very strong rand. So now if we have a potential weakening of the rand and still high fuel prices and the increase in taxes and fuel levies coming into the fuel mix, there's a lot of concern about where is this fuel price going. We now breached the 11 rand mark, and there's concern that we're heading towards the 15 rand type level. So there's a lot of discussion and concern about that. But we've also had stockouts in Gauteng and in other parts of the country over the last few months where there have been shortages and people haven't been able to fill out. And there wasn't the outcry that we saw with the electricity brownouts and blackouts. But there is concern about that. So South Africa is still looking at the option of boosting security of supply through maybe another crude oil refinery or through another coal to liquids plant. But this week, BP chief economist was in town, and Christoph Ruhl was just discussing their energy outlook for the next 20 years. And he did raise some issues or concerns about considering new refining capacity for South Africa and around the world. There's basically an overcapacity of refining, overcapacity in refining space at the moment, and it's not likely to go away for some time. There's also a number of closures and shutdowns happening around the world. And he's saying, the economic logic doesn't really make sense for South Africa to be considering a fairly large investment down in the Eastern Cape that isn't even linked to infrastructure at this stage. We'd have to build infrastructure to bring it to where the fuel is needed. So it is in the list of 43 projects that were outlined in the budget review, but it's at the feasibility stage. Project Matombo, it's a Petrosa project, and government again has to make a decision. Are we going to go against the global trend on terms of overcapacity, as well as the fact that what BP argues is there's a lot more trade in liquid fuels around the world, so it's not so hard to get access to final product? Or are we going to move ahead to shore up security of supply with this refinery? And what are the subsidies that are going to be required? Is the taxpayer going to be happy with those subsidies? And where do those subsidies land up? If there are subsidies and they land up in the borders of the South African economy, generally people can stomach that. But if those subsidies are used in a way that we have to land up exporting a portion of the product from the Coega refinery to other markets, and the consumers in other markets benefit from South African taxpayers' money, there will be a less happiness around that. So it's a big decision, and government is aware of this decision. I think they're taking their time over it. We see there's this big audit of our refineries that's now underway that was confirmed in a parliamentary question that was posed to Minister Deepaul Peters, and we should by the end of the year have some sort of 20-year roadmap, and we'll then have some visibility of whether we should be moving ahead with boosting our own refining capacity, upgrading the existing refineries, which also are not in a position yet to produce the cleaner fuels that we need, or whether we're going to be looking at really infrastructure side of the equation and saying, yes, we're going to be part of this import equation for a long time. It's a very big dilemma, very big discussion, and one that is going to require a lot of wisdom.
On the electricity front, there has also been more movement this week on renewables, and the prospect for conventional production from the private sector has been raised.
Yes, the renewables second window closed this week on March the 5th. So we've had the next bidding round. We've got 3,725 megawatts up for grabs for solar, wind, biomass, biogas, landfill gas, as well as mini hydro. In the first round, we saw the first round was very much dominated by solar, photovoltaic, wind, and some concentrated solar power. It's going to be interesting to see what the level of bids and interest were in the second round. By all accounts, there'll probably be more bids in the second round than the 53 that came through last year. And we then had the first 20-something preferred bidders named in December during COP17. It's going to be very interesting to see how many bids, also what megawatts were bid and what technologies were bid in the second round. We haven't got that information. We should have it soon. But the indications are that there's a lot of interest and that the pencils were sharpened all round. Government wants a lot more local content, and it's going to be interesting to see if the second window delivers that. And there's also a view that I've read that prices bid will be below the caps that have been outlined for the different technology. That will be quite a good development, because they are quite high, those caps. But in the first round, we apparently didn't see anything well below the caps for the different technologies. So if we do see that, it will be quite a dramatic success. And at the same time, a request for information was released by the Department of Energy this weekend, or last weekend, to allow conventional co-generators or producers of power from coal or natural gas or imported hydro to start putting in their estimates of what they can produce for the South Africa's distressed or stressed power system at the moment. That's quite big news as well, I think, because it's been a lot of focus around the renewable bidding program. And this is how the renewable bidding program started. It started with a request for information in 2010, massive response to that request for information, which led to a whole rethink in the way we rolled out. We were initially going to go with a refit program, which was found to be, there were difficulties legally with it because it didn't have a competitive bidding part to it. But it did lead to a fairly sophisticated rebid process, or renewable energy RPP bidding process, which people seem to have come to terms with and are much more happy with. And if we can see the same happening for the independent power producers in the conventional space, it could be quite a dramatic next phase of development, because at the moment all the conventional stuff is centered around Eskom. But if we can have the private expertise, private innovation and private finance and especially project management coming into this power equation, I think it would be quite positive, because the total reliance on Eskom is quite problematic, especially where the project managing capacity hasn't always been in place, and we see major delays with Medupi and Kusile. So I think it's very early stages, and there might not be the interest that I think that I'm proposing there might be, but I think it's a fairly significant development, and it's something that we need to watch.
Terence, thank you very much. That is the Second Take show for this week. Thank you for watching, and join us again next time for more news analysis.